credit to the private sector (CPS) in Nigeria has expanded significantly in the last 2 years, growing by 75.9% to its all-high of 117.783 trillion naira as at September 2025, from 66.944 trillion naira in the corresponding period of 2023. CPS includes loans, trade credit, and other accounts receivable and support provided by banks to private sector within a period. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kikelomo Okeri. The CPS is a global measure of banking sector balance sheet resilience and contribution to the national economy. Findings from the Central Bank of Nigeria (CBN) data reveals that year-on-year, the CPS has been growing steadily from 66.94 trillion naira in September 2023 to 109.411 trillion naira in September 2024, and then to 117.783 trillion naira in September 2025. According to experts, increased private sector credit implies a major boost for the economy, establishing a link between credit to the private sector and economic growth. On quarterly basis, for the year under review, the CPS grew by 2.2% to 115.815 trillion naira in the first quarter of 2025, 113.3355 trillion naira in December 2024. It further grew by 1.2% to 117.200 trillion naira in the second quarter of 2025, and then increased by 0.5% to 117.783 trillion naira in the third quarter of 2025. Reacting to the development in the CPS, Olatunde Amolegbe, former president, Chartered Institute of Stockbrokers, says increased private sector credit implies a major boost for the economy, as there is a link between the credit to the private sector and economic growth. It is projected that credits to the private sector may continue to increase if the CBN continuously to reduce the monetary policy rate. It believes that the enforcement of the CBN limit on deposit money banks loan to deposit microprudential ratio will continue to drive the willingness of the commercial banks to create risk assets over the short to medium terms. Commenting as well, expert says credit is growth enhancing even when trade openness, monetary policy, investment, climate change, and infrastructure are low. Adding that for Nigeria to keep having continuous economic growth, there is need to have continuous increase in credit to the private sector that is regarded as the engine of growth. However, the Chief Executive Officer of the Center for Promotion of Private Enterprises, CPPE, Dr. Muda Yusuf, says the credit outlook remains cautious, calling for an expansive distribution of credit across all tiers of companies and sectors. According to Yusuf, there are major concerns in terms of distribution of credit across sectors and companies with small businesses, which contributes more to job creation and economic inclusion. Nigerian gross profit from crude oil and gas sales fell by 824.6 billion naira in 2024, even as overall oil receipts and production showed an uptrend. Fresh data from the Budget Implementation Report for the fourth quarter of 2024, published by the Budget Office of the Federation, shows that gross profits dropped to 1.08 trillion naira in 2024 from 1.90 trillion naira in 2023. That represents a 43.32% year-on-year decline. The 1.08 trillion naira outturned also by 385.39 billion naira, that is 26.32%, signaling much weaker than planned profitability from crude sales despite reform such as petrol subsidy removal, and tighter upstream monitoring. Mostly 6 trillion naira in 2023. This means gross profit accounted for only about 7.2% of the total oil and gas revenue in 2024, with 1.08 trillion naira out of 15.07 trillion naira, compared with roughly 28.8% in 2023, which is 1.90 trillion naira out of 8.36 trillion naira. In other words, while the government is mobilizing more naira revenue from the sector, far less of that is showing up as pure profit. Quarterly pattern reinforced the pressure on margins. Actually, gross profits came in at 365.22 billion naira in the first quarter of 2024, slumped to 161.49 billion naira in the second quarter, recovered modestly to 216.5 billion naira in the third quarter, and then rose to 335.69 billion naira in the fourth quarter. None of these quarters, however, was able to meet the implied quarterly budget benchmark of 366.09 billion naira. The collapse in the second quarter numbers in particular created a hole that subsequently quarters could fill, leaving full profit well below target. Beneath the weak gross profit line, the rest of the oil and gas revenue table looked far more buoyant. Total oil and gas revenue before deduction jumped to 15.07 trillion naira in 2024 from 8.36 trillion naira in 2023, an increase of about 80.33%. This is still below the 19.99 trillion naira budget by 4.93 trillion naira, that is 24.65%. But it shows that the fiscal system is collecting much more naira revenue from the upstream sector than earlier. Petroleum profit tax and gas income more than double, rising to 6.00 trillion naira in 2024 from 2.84 trillion naira in 2023. The increase of the 3.17 trillion naira translates to 111.56 trillion naira budget by 5.98 trillion naira, which is about 49.89%. Oil and gas royalty is about 49.89%. Oil and gas royalty also surged. They reached 6.99 trillion naira in 2024, compared with 2.50 trillion naira in 2023. A jump in production and improved metering and compliance, as well as stricter enforcement by the regulators, such as the Nigerian Upstream Petroleum Regulatory Commission. Exchange gain was another major driver, with naira sharply weaker after FX reform. The naira value of the dollar-dominated oil exports rose dramatically. Exchange rate gain climbed to 4.24 trillion naira in 2024 from 791.88 billion naira in 2023, an increase of 3.45 trillion naira, that is about 435.93%. Other ancillary revenue lines also improved. Gas flaring penalty stood at 391.26 billion naira in 2024, compared with 140.54 billion naira in 2023, which is about 178.40%. Incidentally, oil revenue from royalty recovery and marginal fields more than doubled to 347.75 billion naira from 155.99 billion naira, while concessional rentals and pipeline-related miscellaneous revenues also posted triple-digit percentage growth. Yet, despite this broad-based expansion in tax, royalty, and FX-related inflow, the gross profit line in the move opposite direction. The data strongly suggests that higher revenue mobilization is being offset by elevated operating costs, legacy obligation, and the structure of production sharing and joint venture agreements, leaving the government with a shrinking slice of the sector underlying profitability. Total deduction covering items such as joint venture cash calls, cost of collection, and federal-funded upstream projects dropped sharply from 2.45 trillion naira in 2023 to 156.70 billion naira in 2024. The line for other federal-funded upstream projects alone moved from 1.92 trillion naira in 2023 to zero in 2024, while physical deduction under JV cash calls were reported at 527.42 billion naira in 2023 and nil in 2024. As a result, net oil revenue to the Federation rose aggressively. Net revenue, which is the same as the TO Federation account, climbed to 12.95 trillion naira in 2024 from 4.82 trillion naira in 2023, an increase of 8.13 trillion naira, that is 168.83%. Total oil and gas revenue after the 13% derivation to oil-producing states also rose from 7.27 trillion naira in 2023 to 13.11 trillion naira in 2024, up by 5.84 trillion naira, that is 80.35%. This headlines number partly explained why FAC oil allocation have looked stronger in nominal terms through 2024. Much of the improvement in the net oil revenue is being driven by FX valuation gains and the way deductions are booked, rather than by underlying efficiency or cost competitiveness in the upstream sector. Nigeria's maritime exports grew by 12% in the first half of 2025, rising from the 38.27 trillion naira in the same period of 2024 to 42.87 trillion naira. The growth was driven by foreign exchange reform, naira depreciation, and higher export volumes, particularly from the Dangote Petroleum Refinery. According to data from the National Bureau of Statistics on Nigerians' exports by mode of transport, maritime trade continued to dominate all other means, including air, road, and pipeline. Exports via maritime transport rose significantly in the first half of 2025. In the first quarter, exports stood at 20.36 trillion naira, while the second quarter recorded 22.51 trillion naira in comparison. The first and second quarter of 2024 recorded 19.02 trillion naira and 19.25 trillion naira respectively. The director of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, attributed the growth to the positive impact of the foreign exchange reform and improved trade incentives. Yusuf says the Central Bank of Nigeria reform under Governor Olayemi Cardoso, particularly the unification of exchange rates and liberalization of the forex market, has provided a significant boost for exporters. Yusuf also cited the contribution of Dangote Refinery, particularly through fertilizer and refined petroleum export. He urged the federal government to sustain the reform and deepen support for the private sector. A supply chain expert, Marcel Mba, described the rise in exports as a positive sign for the economy, noting that exports remain a key source of foreign exchange. He, however, cautioned that the broader effects would deepen on the country's trade balance. Mba further explained that with the refinery now exporting refined petroleum products and fertilizer, Nigeria could expect continued growth in maritime exports and a possible strengthening of the naira if the trend continues. Both Yusuf and Mba maintained that the performance highlights the importance of export-led growth for Nigerian economy and called for consistency in implementing reforms. The Minister of State for Petroleum Resources, Senator Enikin Lokobiri, has warned that the world risks an imminent energy crisis unless about $700 billion is invested annually to sustain global energy supply. Speaking at the 2025 Nigerian Association of Petroleum Explorationists Conference in Lagos, themed Revitalizing Energy Strategies for Petroleum Exploration and Production, Lokpobiri says global discourse has shifted from abandoning fossil fuel to embracing an energy mix, noting that oil and gas will remain crucial to global energy security for decades. The minister reaffirmed the federal government's resolve to revive oil exploration and boost production through the full implementation of the Petroleum Industry Act and prudent use of the Frontier Exploration Funds. Lokpobiri lamented that the decline in exploration activities across the country, stressing the several and licensed fields remain idle or underdeveloped. He noted that the Frontier Exploration Fund is already being deployed to open new basins and assured transparency and accountability in management, calling for Africa-led solution to continent energy challenges. Lokpobiri urged Nigeria and other African nations to take charge of their energy future rather than rely on unfulfilled promises of the transition financing from developed countries. While supporting renewable energy initiatives, Lokpobiri maintained that global investment in renewables is showing even among advanced economies, adding that oil and gas will remain vital to economic growth and stability. He assured stakeholders of the government's commitment to creating an enabling environment for investment, innovation, and technology-driven exploration in line with President Bola Ahmed Tinubu's 8-point agenda, which prioritizes energy security. The minister also commended NAP for its contribution for exploration and capacity development, describing the association as a key partner in the Nigerian energy future. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. Petroleum marketers may soon suspend petrol importation following a fresh cut in the ex-depot price of petroleum motor spirits by Dangote Petroleum Refineries, which reduced its January price by 49 naira per litre last Friday. The latest price review has reshaped competition in the Nigerian downstream market, with industry operators saying the move could make imports uneconomical. Data from the petroleumprice.ng shows that Dangote Refinery now sells petrol at 828 naira per litre, down from 877 naira, representing a 5.6% decrease. The second major adjustment in 3 months, industry expert says the new price comes amid the federal government's 15% import tariff on refined fuel, which further tilts the market in the favor of local produced products. The executive secretary of the Major Oil Marketers Association of Nigeria, Clement Nsong, says Dangote price move could halt imports in the short term. He explained that the Dangote, as a private refiner, set price based on import parity, the cost of bringing fuel into Nigeria from various markets, and may adjust then to reflect market realities and competitiveness. Esong noted that the economies of scales versus size and storage capacity affect land costing, adding that while Dangote monitoring market trends, its pricing serves as a competitive benchmark in the deregulated market. However, the president of the Petroleum Product Retail Outlet Owners Association of Nigeria, Petro, and Billy Gilhari cautioned against completely halting imports, warning that local refining capacity remains insufficient to meet the national demand. He urged the federal government to review the 15% import tariff to ensure steady supply, noting that imported products play a key role in balancing the market, while Gilhari described Dangote's price cut as a natural outcome of market competition. He expressed optimism that the price will stabilize over time, insisting that imports cannot stop completely. Meanwhile, new data from the Major Energies Marketers Association of Nigeria shows that Nigeria's average import parity price for petroleum stood at 824.10 naira per litre over the past 30 days, slightly down by 1.2% from the previous month. All right, before we call it a wrap, let's take a quick look at the stock market. The Nigerian exchange opened the week on a bearish note as sustained profit-taking dragged the all-share index down by 0.50% to 148,781.90 points on Monday market. Capitalization also fell by the same margin to 94.53 trillion naira, wiping off about 471.99 billion naira in investors' wealth. The downturn, which pushed the year-to-date return to 44.55%, was driven by sell-off in linkage assurance with minus 10%, NACO with minus 9.95%, and GTCO with minus 0.59%, among others. Market sentiment remained negative, with 40 decliners outpacing 13 gainers. ASO Savings with plus 10%, Cornerstone Insurance with plus 8.70%, and Fidelity Bank with plus 4.81% led the gainers chart. Trading activities also weakened as the volume of share traded fell by 30.9% to 364.35 million units, while value traded volume dropped by 26.2% to 11.35 billion naira. Despite these numbers, of the deals rose by 32.18% to 32,564, reflecting increased retail participation through smaller trades. Accessco topped the volume chart with 22.8 million units, while Dangote Cement led in value with 2.15 billion naira worth of trade. Across the sectors, insurance with minus 0.24% and consumer goods with minus 1.32%, indices recorded the steepest losses, followed by banking with minus 0.65% and industry goods with minus 0.01%, while the oil and gas closed flat. According to the Carries Asset Management, the weak performance reflected reduced investors' appetite as traders continue to adopt cautious and risky strategies amid challenging microeconomic conditions. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.